A brand new week is about to kick off right here at the New York Stock Exchange right behind me. And if it's in any way like last week, expect a wild ride, because last week we started off well in the red with the Dow Jones kicking off the week with its worst performance of the year 2021. In fact, the Dow Jones dropped more than 700 points as yields fell and COVID variant concerns lifted investor worries over an economic recovery. But then steadily through the week, tech stocks continued to lift the markets as Facebook and Twitter helped pave the way for a strong rebound, so much so that the Dow Jones rose the following 4 straight sessions. The S&P 500 and NASDAQ not only were within 1% of their intraday records, but the S&P on pace for a record close above the closing high set back on July 12th, that of which was achieved. Meanwhile, we do have a full week ahead. Let's see how the markets are going to trade. Will they trade and continue to see the bulls running rampant on Wall Street, or will we see another sudden shock to kick off the week? Let's now take a look at what will likely move the markets in the week ahead. Now we kick off the week on Monday, and it's a bit of a quiet start. We have the release of the ECOFIN meeting throughout the session over in Europe, Cyprus to be more exact, while here in the United States we have U.S. new home sales figures, that of which are expected at 0.792 million month over month. Tuesday keeps all focus on the United States and the release of more housing data in the form of the U.S. Housing Price Index, but there's also June's durable goods orders, which are expected at 2.1%. Wednesday kicks off in Germany with the German August Consumer Confidence Survey due out. That read is expected to come in at -4. Also, we have consumer prices due out of the nation of Canada, and right here in the United States, we have the Federal Reserve's interest rate decision, that of which is expected to remain unchanged at 0.25%. Thursday sees us return to the nation of Germany with German unemployment due out. Expectations call for a read of 5.8%. In addition, the preliminary German Harmonized Consumer Prices Index 08 expectations call for a read of 3% year over year. And in the United States, it's a busy session. We first begin with weekly jobless claims figures, both initial and continuing. And then we have the release of preliminary second quarter GDP, that of which is expected to come in at 5.4%. And then there's U.S. pending home sales figures expected at -0.8% month over month for June. And then on Friday, we have preliminary GDP reads out of Germany and the European Union. Germany's rate expected at 2% quarter over quarter. In the EU, expected to see a read of 1.5% quarter over quarter. In addition, the European Union's unemployment rate is due out. That's expected at 7.9%. While here in the United States, we have the release of personal income, personal spending, as well as the University of Michigan's Consumer Confidence Report, that of which is expected at a read of 80.5. Meanwhile, keep an eye on all of the earnings reports due out. Earnings season still in full swing here in the United States. And until next time, live from the New York Stock Exchange, wishing you all a great weekend. I'm James Sweeney, reporting for ICF.